Hi and welcome back to another video. In this video we're going to be analysing Skillz. Ticker symbol is SKLZ, and it's a stock that has been requested quite a bit recently and has gained a lot of attention with investors. Firstly, due to the big run up it had in just 4 months, which saw the stock triple, but more recently because of the 60% fall that the stock has had since its high in February. And I'm hoping in this video we can find out whether this massive sell-off has created a buying opportunity for investors looking to pick up Skillz stock. Firstly though, let's listen to this short clip to find out what Skillz is and what it does.
What do you imagine when you think of sports? Players and heated competition, stadiums full of cheering fans, cameras and reporters on the sidelines to broadcast for the people at home, right? I bet you didn't imagine anything involving video games. Did you know that esports are a multi-billion-dollar industry that's surpassing the popularity of traditional sports like basketball, football, and baseball? But just like in traditional sports, only the top 1% of gamers are good enough to compete professionally and get recognized for their talent. What about the 99% who play games every single day but will never get to earn the prizes and fame of the pros? The 99% who are desperate for more exciting gaming content to watch and follow? That's where Skillz comes in. Operation Esports for everyone. By bringing multiplayer competitions with prizes to mobile, Skillz lets anyone become a pro esports athlete. How does it work? It's simple, really. Any developer can download our free SDK and set up their tournaments on the Skillz tournament management system to transform their mobile game into a competitive esport, so that anyone with a phone can compete for prizes and recognition in head-to-head matches, bracketed tournaments, or 50,000 player live events. Plus, any streamer can broadcast live prize-skilled tournaments with our dynamic tournament overlay to engage a massive audience of fans who can watch and join in on the competition. Over 8,000 studios have partnered with Skillz to build and manage their mobile esports, which are enjoyed by 15 million registered Skillz players. Each day, these players compete in 1 million tournaments a day, boosting engagement and revenue for developers. Streamers run Skillz tournaments in their channels and receive payment per engagement, and their viewers stick around nearly twice as long as they did before. All facets of the sports ecosystem, the game, the players, the broadcasters, and the fans are covered by the Skillz mobile esports platform. Skillz is transforming the way the world thinks about sports. With Skillz, the future of sports is electronic. The future of sports is mobile. The future of sports is now. Ready to level up your game?
Okay, so in summary, Skillz is an online mobile gaming competition platform that is integrated into several or a number of iOS and Android games. It allows the 99% of gamers, also known as esports athletes, who are unable to play professionally, a chance to earn prize money for competing like a pro would. And the platform also allows game developers to monetize their games more effectively by using the Skillz platform to turn their mobile game into an esport, which gives them the right competition infrastructure and distribution to various users. Now, we've talked about the gaming industry a few times on this channel in relation to companies that will benefit from the growth of the gaming market, but with Skillz, they're seemingly at the center of the growth of the gaming market, with mobile gaming expected to be one of the flagship methods of future entertainment in the world. So much so that Netflix even mentioned the mobile gaming market as one of their key competitors in a recent investor letter, even more so than Disney or HBO in their eyes, so they say. And in reality, the numbers don't lie. Gaming as a market is now bigger than movies, music, and books collectively. And what's even more indicative is the 5-year compound annual growth rate that we see here. So 14% for the gaming market as a total, and then mobile gaming, which is the fastest growing part of the market, at 23%. And really it's getting to a point where it's not far off television, which is obviously the largest form of entertainment at the moment. If this growth rate can carry on, then you can see a TAM that's going to be even bigger than this number here. And we can see here in this market snapshot that Mordor Intelligence did very recently that they expect a compound annual growth rate for the mobile gaming market at around 12.6% up until 2026. But we're talking about a company in Skillz that is not even one of the big players. Of course, this is a very fragmented market in that no one really dominates it at the moment. It's a large market at 83 billion currently, but there's no real dominator. And also you're talking about a company that only has a small stake in this market at the moment. That 12.6% won't really be reflective of what their growth could be, but just a tailwind behind them. Now, if we link this back to some more specific analysis on Skillz and its business model, you can see here their business model is essentially that they take an entry fee from all of the gamers that are going to step into a competition. The combination of all of those entry fees makes up gross marketplace volume, which is essentially all of the money that's been paid into the pot. What's paid out is prizes, incentives, and then the developer's profit share. That's around 85% of that GMV. So then Skillz take a 14.6 or 15% take rate on that GMV, which only cost them 5% of that revenue to produce. So they've got 95% gross margins. And we can see here they're demonstrating how potentially profitable they can be with that 95% gross profit. Operating expenses, excluding UA marketing, makes up around 70% of the revenues, which gets us an adjusted EBITDA margin, and adjusted meaning that they've taken out the UA marketing cost, of around 25%. So what they're trying to do here is just demonstrate, they're not profitable at the moment, we'll get to that, but they're trying to demonstrate how profitable they can be. And I really like it. I think it's a good sign. I've got some points down here which basically highlights my thoughts on all the above. They've got a very good business model and monetization, which is easy to understand. And that's really important to me. This is easy for anyone to understand. Anyone can get that money's been paid into a pot, they get a share of that money, and it doesn't cost them that much to create all of that revenue. And secondly, they've got best-in-class margins at 95%. Not many companies can boast 95% gross margins, and it's reflective of a quality software business, which they are. And then lastly, I've touched on it, but the path to profitability should be an easy one once marketing spend begins to slow as a percentage of revenue. So we shouldn't see this at the moment because it is critical in their growth of the platform. But as they start to grow, as the platform gets a lot more exposure, then that marketing spend as a percentage of revenue should start to fall off. And we'll see the company become maybe as profitable as 25% as they show us here. I think that's what they're trying to hint to us. And just to add to how good the business's economics are, they've got this graph here which I thought was really interesting to see. So they've shown us since 2016 they've deployed a total amount of 131 million into the business. 230 million of revenue generated from inception, just off of 131 million. So that's almost a 200% return on capital deployed if we're looking at a revenue generation number. Of course, they're not profitable yet, so the actual return on invested capital would be nil at the moment. But what it does show us is how high the returns on capital can be for this business once they start to prioritize profitability. I think that's a really positive thing that we have to factor in for here. And definitely one of the most impressive things about Skillz that I was definitely not aware of was their user engagement. As we can see here, they have a higher user engagement number or more minutes per paying user per day than the likes of TikTok, YouTube, Facebook, Snapchat, and the mobile gaming average only at 26 minutes per day. They're up at 60. And this is really important because the more engagement you have or the more time consumers spend on your platform, the better your monetization should be over the long term. Now, lastly, before we start to make any forecasts on Skillz, I thought this would be good to look at to give us an idea or help with our estimations in terms of how big really can Skillz be. It's not a huge business at the moment, only 230 million in revenues, and of course only 120 million the year before. So it's not a massive company, especially in relation to some of the companies that we look at here on this channel. But what is compelling is the size of their addressable market, at least by their standards anyway. So at the moment, they think that the iOS market opportunity is around 9 billion. They have about 1.5% share of that market as of now, which again isn't big, means they can eat into that market. They're adding here all of these factors that will add to their TAM growing up to 125 billion at some point. So adding Android, they think that the distribution will add 15 billion to the TAM. New genres as well, so different types of content, that should add 22 billion. And then going international or going global should get the TAM up to around 125 billion. Now, of course, this is just an estimate, but it's a very bold number to put out there. 125 billion TAM potential when you're a company that only has 230 million in revenues. That creates a very big pond to fish from, but the question will be, can they eat into this market effectively, and how quickly can they do that? Now, what will tell us a little bit about how much market share they're eating into is the growth rate of the revenue at the moment, or the GMV, but to be honest, it's a percentage of the GMV, so the revenue is going to tell us all we need to know. They're doubling revenue year on year at the moment. Of course, this is only the past 3 years, but they've gone from 50 million in revenue up to 230 million in revenue just in 2 years. That's a compound annual growth rate of 113%. And that's nothing short of explosive. Of course, they are losing money, like I pointed out, 25 or 26 million in the past 2 years, and then very recently in 2020 they made a loss of 95 million on an operating basis. Free cash flow, not as bad, but still negative 1 million and negative 22 million in 2019. Shares outstanding haven't flown up as much as you probably would expect with a company like Skillz, but they have been going up somewhat, so shareholders have been diluted. But what's critical for us to look at, especially if it's a company like Skillz where they're growing top line very rapidly, but they are losing money in the process, we need to know that they've got sufficient cash and cash equivalents to pay that deficit. So if they're losing money, it's got to come out of their pockets some way. And you can see here they've currently got 263 million in cash or cash equivalents with zero debt. So not a bad balance sheet, not at all. Shareholder equity is 235 million. It's essentially made just out of the cash. They don't hold much assets. They don't have much capital on their balance sheet because, like I said, it's a very asset-light business model. But that 263 million should be okay for now to eat into some of the negative cash flow or negative earnings that they might have in the next sort of 1 to 2 years. Now, leading on from that, I have a forecast here, a 5 and a 10-year forecast. So we'll look at both of them. Let's just start with the 5-year and analyze how that looks. So although the constant doubling over the past 2 to 3 years for Skillz has been very explosive, like I say, I don't think they can continue to double as they start to get larger and larger. Or at least, I wouldn't want to forecast that they would. That would be very bullish to do so. Of course, it's not impossible. However, I've chose to be a bit more conservative in my estimations. Drop it down to 75, but for 2 years, so that gets them up to around 705 million to 2022, and then drop the growth rate down to 35% gradually. And this gets them to just shy of 2 billion in 2025. This would be an expected GMV, so money spent on the platform essentially, of around 13.7 billion, and would give them only 1.6% share of their expected total addressable market, which is similar to what they have at the moment of their current market in the iOS and Android gaming apps. So I feel that gives us a little bit of a good indication. And for any of you wondering, the average is 55% this average growth rate over the next 5 years. It's a big number, but I think it's doable. Any of you who's saying that it would be hard for them to grow at 55% when the market itself is not growing above 20%, you've got to remember this is a company that's only 230 million in revenue at the moment and still in its early stages. I mean, inception was in 2016. So this is a very, very young company that's eating into a very big market. Now, on the margin side, which is probably more important, we know this company is going to grow, but how quickly can they become profitable and how profitable can they be? That's the big question. So I don't have them actually making money up until 2023. I think the fact that they lost 95 million or 41% back in 2020 tells us that this company is not ready to be profitable yet, or doesn't want to, at least. Most of its spend comes with sales and marketing, trying to push the platform out there, trying to grow the platform. And I think that's what they need to do. So I have them losing 150 million over the next 2 to 3 years, but they have enough cash to eat that amount. And I have put in that they raise shares 1% every year because with the market cap they have at the moment, they'll be able to raise around 50 million per year if they need excess cash to fund the growth. And if you look at where that gets us, well, it gets us to a company that we could probably exit at around 12 billion US dollars in 2025. This is based off a terminal value multiple of 25 times on Judgment Day. And I think 25 times, again, like I always try and go with, is a fairly conservative estimate for how much we could sell the company for. What I always like to look at is what would be the expected PEG ratio going off of these estimates. And if they are growing at 35%, it's a PEG ratio of 0.71. So very conservative in my eyes. Perpetual growth method as well at 3% tells us that the terminal value would be slightly higher. So we get an average here of 12.3 billion for the company in 5 years' time. Just for info, that is a share price of almost $40 per share and expected return of around 2.2 times. If we discount all of that back to today, then we get an intrinsic value for the stock of 5.8 billion or a share price of $18.98. And that's not too far off the share price for the stock at the moment, which I was actually surprised to see, and some of you may be surprised to see as well. This means that the upside is slim, but sitting around 4%. So if you're up for a 15% return or maybe even less, then you could do well out of Skillz. It might be a buying opportunity after that recent sell-off. And now I'll show you the 10-year forecast, which in my opinion, I don't know which is best for Skillz. Of course, Skillz is a very young company in its early stages, but forecasting 10 years into the future, definitely is a dangerous game. And the possibility that you could actually accurately predict what a company will look like in 10 years is very slim, but it is good to give you a screen of the stock, especially one as young as Skillz, and it should give you a good indication as to the long-term value of the business. So just pointing out the key differences here in this valuation. There's not many at all. The revenue growth actually as of 2025, I've dropped all the way down to 10%. But that would still make a compound annual growth rate over 10 years of 32%, which is a very good growth rate over a 10-year period. We shouldn't forget that. Operating income or profit margin I've kept at 25%. And again, the thesis behind that 25% operating margin is that they've shown us in the presentation on what we looked at earlier in the video that they can get to 25% profit margin if they take out some of the marketing costs. Of course, this won't happen until the platform has scaled up to a certain level and they stop spending so much money on marketing as a percentage of revenue, but it will happen eventually. And I was jumping straight to the DCF. Of course, I've kept the market multiples and perpetual growth rate exactly the same as we saw in the 5-year at 25 times and at 3%. This shows the stock currently is 90% overvalued, and obviously bullish and maybe a little bit outlandish, but I'll give you the reasons why. What's driving a lot of the value here is the fact that we've got 25% profit margins or 20% quite early in the forecast period. So if they can do this, and I believe they can, I don't know for certain whether they will, but it's a possibility. It means that what you're buying the stock for today at 5 billion will return close to a 10% yield only after 5 years. So we've got 9% yield off the free cash flow we're estimating in 2025, and then rising up from there all the way until the end of the period where you get 15% free cash flow yield on your investment, on your original investment today at 5 billion, which is just an insane amount of free cash flow, an insane amount of return to be receiving as investors. And of course, on top of that, we've got the market multiple or terminal value, which usually makes up the majority of the present value. So that's what's driving a lot of this number here and why it's saying it's 90% overvalued. And that would make an intrinsic value of 10 billion or a share price of 34. So, even more stating the fact that Skillz could be undervalued after that recent sell-off. But for me, I'd like to stick to this 5-year for Skillz just because it's relatively unknown to me how quickly they will grow, especially over a 10-year period. How quickly they'll become profitable is quite a big thing as well, although I think profitability and the path to profitability won't be too hard for them looking at their financials, looking at the cost of all of their revenue. But I want to keep it as conservative as I can. And hey, this valuation still shows it as undervalued. So if anything in this video, it's told us that there could be a buying opportunity there for Skillz, especially after the recent drop. I'll make this valuation model available to all of the patrons on the Patreon page, as well as various other valuations that we've done. So go ahead and check that out. If you are interested in supporting the channel, you'll get other benefits as well. So go ahead and check that out. I'll leave a link in the description. Let me know in the comments below what you think of Skillz. Hopefully this was a good screen for the stock and also gave you some information as to what Skillz does if you were not aware before this video. But also leave a like if you enjoyed the video. Subscribe to the channel if you haven't already. I will see you all in the next video. Good luck with all of your investments.